Hello and welcome everybody to today's Gold and Silver Club webinar, the Gold and Silver Club Weekly Commodities Review in alliance with ACM Gold, presented by myself, Phil Carr and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session today is going to cover on end of week summary for gold, silver, oil and the commodity currencies. We'll be doing live technical analysis, so an end-of-week summary for gold, silver, oil. We'll be looking at the top trades of the week, live market commentary, and also looking at the week ahead, so key events looking forward and answering any of your questions. Now, it's a great time to be on this call right now. Gold has actually just broken a key technical level that we've been looking at this morning, so it's looking very interesting now. It's just a second ago it was at 1267, so we've broken through a key support at 1276. So we'll be covering that with you live very shortly. Silver also on its way down. There's lots to look at today. So just very quickly, gold price in the ZAR over this week. We can see we have had a fall over the course of this week in the price of gold, priced in ZAR here, as well as against the US dollar as well. So we'll take a look at that too. And just a really update on the fundamentals at the moment. So the key news that we've had coming out this week, we've seen some large gains in oil this week, and gold is obviously, we've seen gold slip on the US debt deal optimism. So the partial shutdown in the world's largest economy, America, hit its 11th day on Friday. So today it's into its 11th day of the US shutdown. Yesterday, news of a possible deal to end the fiscal impasse that has closed the US government and fueled fears of a default led to a general risk-on attitude in the marketplace. The sentiment allured traders out of the safe haven precious metals and into the US dollar. On Thursday, the White House confirmed President Barack Obama would look at a proposal by the Republican Party to extend the debt ceiling for 6 weeks in an attempt to end the 10-day government shutdown. So the US needs to agree on raising the nation's $6.7 trillion debt ceiling by the 17th of October next week. A failure to do so could see the government default on its obligations. If this did occur, it will have a serious impact on global economic growth and result in higher interest rates for everybody across the world, according to the International Monetary Fund. On yesterday's announcements, the US dollar did rally to a 2-week high. The gold price slipped. It's actually slipped further just now during the US session as the risk of the US defaulting on its $16.7 trillion debt obligation was lowered. So this news presented commodity traders with a highly lucrative opportunity to sell short gold, as highlighted in our top trades of the week, which we'll be discussing. And the other commodity markets, crude oil price surged on Thursday to hit a 1-month high on concerns over supplies from the Middle East on news that Libya's Prime Minister had been captured by rebels. So looking ahead, the question now really is how will the US debt ceiling affect gold and silver prices moving into next week? So we'll be looking at some live technical analysis very shortly. For those of you who are new to our webinars at the Gold and Silver Club, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world, gold, silver, oil and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me on the call is Nick Kelsey, professional trader, investment analyst and speaker. Now, Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications and appears frequently on financial television with myself. So we're going to take a look very quickly at the gold price. So the gold price right now, currently at 1,270 an ounce. We've just broken through a key level, so we'll take a look at that very shortly, but looking very interesting at the moment. So one thing to note is gold seasonality at the moment. So gold seasonality does play an important part in the commodities, particularly gold. This is the 30-year gold futures seasonal chart, and at the moment, where we are at the moment, we've just been discussing this morning with our Gold and Silver Club traders the current potential setups that we have, because October, after the first week or 10 days or so, is typically a bearish month for the metals in general. We have seen, if you go back to the charts last year, the previous year, we have seen some corrections over the month of October. So technically speaking, the market is still in a downtrend for gold. We've got fundamentals which are also providing some pressure if we get resolution on the debt ceiling into next week, and we've just broken some key levels of support. So we're not looking for big buying opportunities of gold right now. We're looking to take advantage of selling opportunities. We've just actually hit another top trade of the week whilst we're setting up for this webinar, with gold breaking and hitting our first profit target at 12.76, and we've just got a trade on this at the moment selling short. So we'll talk you through that. US dollar index, the US dollar index is inversely correlated to gold. So when you see the US dollar index spike as it did this week, as I'm sure many of you already know, you will tend to see weakness in gold, and you also see more weakness in the emerging market currencies when we do get big moves in the US dollar index, which also of course affects the ZAR. Okay, so we'll be taking a look at that very shortly too. So just to go over our top trades of the week, so what have been the most profitable markets commodity-wise over this week? Well, we've had some really good day trading opportunities for WTI and Brent while they stay very focused in a consolidation right now. We've got some key levels that we're going to be paying attention to today. We want to talk you through very shortly. Before doing that, we're just going to talk you through the technical levels and the top trades we've had this week. So first of all, starting from the beginning of the week, on Monday and Tuesday, had the setup on Monday, and we actually broke through a inverse, we had an inside candle set up, and we broke through a trend channel on WTI at the 102.80 level, and very simply shorted that down for a nice $1 move for over 100 pips, 106 pips. The risk on that trade, 60 pips, each lot traded $600 for a profit of 106 pips, or $1,060 profit, for a 2-to-1 for a short on WTI oil. We then had Brent this week. We've had two opportunities to trade a very similar setup here. We've come up a number of times and tested key resistance zone with Brent over the course of the last 2 weeks. Every time we've come up to that resistance zone, we've had failed attempts to break it. And then once we've come down and broken through a key Fibonacci at 108.43, we've had opportunities to short down to 107.52. So that's happened no less than 6 times where the price has broken through that level and then come to 107.52, each time providing roughly 87 to 90 pips for a very quick day trade. So that was earlier on in the week as well, on Tuesday, that we got a sell opportunity. So risk of 45 pips, each lot traded $450 risk to make 87 pips, $870 profit for each lot traded for a 2-to-1 on Brent crude oil. Now gold has actually, we've just been triggered yesterday into our second sell short on gold as well. We just hit first profit target at 12.76 this morning, or about half an hour before this webinar started, and we continue to see more downside as well. So the entry on that was 13.15, which was on Tuesday evening. We came up to a key resistance channel on gold, which just could not be broken. Nice inverse hammer candle, rejection off that level. We then broke through the low of that the following day and provided a nice sell short opportunity for 180 points. So risk of 100 points to make 180 points for a 2-to-1 for gold just to come down to the next key level of 12.97. Crude oil inventories this week on Wednesday. So crude oil, the forecast was circa 1.4 million barrels in inventories, and actually the actual amount which was in inventories was over 6 million barrels, so quite a large surplus. And on that news, we immediately saw a breaking of a key level again, that same level, 108.43. So with our spread there, we got in at 108.39 and came out exactly the same profit target, 107.52, for a very quick trade in less than half an hour. Hit again our 87 pips on that trade, 45 pip risk, each lot traded $450 risk for a reward of 87 pips, so a profit of $870, or for a 2-to-1 on crude oil. And finally, yesterday, that WTI oil, we're holding the 101 level. So I'm going to be checking that very shortly with you guys, see if we're getting close to that again, because there is an event area at the moment. If we break 101, we're likely to get quite a big move to the downside, at least a dollar move, possibly more down to the key level on that 99.30 we're looking at below. So yesterday we actually found support there for the fourth daily opportunity to get in at that level. Very tight risk to reward, only 30-point risk on that, and we got a profit of 198 just selling off at resistance at 103.24 from an entry at 101.26 for 198 pips profit on that trade for a 6-1 on WTI on Wednesday on the crude oil event. Sorry, that was yesterday on the big surge that we got after the meeting that Barack Obama had and the announcement that was given yesterday afternoon. So looking at what we're going to do now, guys, we're going to go over to some live market analysis. So let's take a look at the charts and we'll go over some key levels. So there we go. So gold, we're very pleased to see this move on gold today because we've been looking for a break of this key level since last night. This is a trade setup that we are currently in at the moment. So next key level. So just this morning, for those of you who've been trading this morning, you would have seen there was a big inverse hammer on the daily on gold, and that we were looking for a next key level there, 12.76. Now we sliced through this with quite a lot of ease today, so we're coming down, and really the next level of support now that I wouldn't look to buy at the moment, certainly not. We're looking for the next level to come down, 12.52, and I mean that's going to be the next key level of support on gold. There's not really any support where it is now from 12.65. There's no reason for it to really find support here until we come down to roughly around the 12.53 level at the moment. So it's looking pretty bearish at the moment, below all key moving averages. We've got this this resistance trend line on gold at the moment. We know from the seasonality that this time of year gold gets very bearish. So we can draw a trend channel here just from the, you can see from the recent lows that we actually put in, although I won't keep that on my chart, but just to show you the sort of channel that we could be following here on gold if we were to mimic previous moves down, if we're going to mimic the resistance, the downward trending resistance here. But I'm going to be looking at horizontal levels for the time being, and the 12.52 level is definitely going to be the next level we're targeting on gold right now. So with that, silver also, silver is now a lovely move on silver. Silver's actually come down and just hit one of our profit targets at 20.95. So we also had a great setup on silver. We had from yesterday, we tested this 50% retracement level, Fibonacci retracement at roughly 21.56. We've broken through Fibonacci level roughly about 45 minutes ago, and we've come down and we've had a really quick short and sharp move just down to previous support there. So gold, especially silver, does move off key levels particularly well. That's for a 52 pip move lower there just to come down and hit our profit target, and we're potentially expecting more risk, more downside here on silver if we get a continuation. We're probably going to see some profit taking on this previous low at 20.95. We may come down to 20.83, 20.75. The next level which we would be looking to break then is going to be 20.75 for the next move down to 19.82. So lots of activity today. So let me just quickly remove this square here. Okay, so these are the key levels we're really going to be looking at. If we do get a breakdown below 12.52 here, I mean what we would expect on a normal sort of, because we're coming towards the end of the week, is that the US session now, got Chicago open now, New York open about an hour and 15 minutes ago. Typically we do tend to see session lows on gold around about 3 p.m. BST, so between just before the UK market closes, when we tend to get the session lows in gold. So moving towards later in the day, when on the close of the market, we might see some buying before the Sunday open. Typically, for those of you who are commodity traders or seasoned traders, you will note that often on the Sunday open we can get some buying over the Asia Pacific session. So we could see a little bit of buying coming towards the end of the session today. But for the time being, we'll be looking at 12.52. 12.53, sorry, as the next level below. But I wouldn't want to hold short positions too much into the close today. There's going to be some day trade opportunities here, but you want to also be taking some trades or closing some profits before the close of the day to avoid any gapping on the Sunday open. Okay, so very much gold a day trading market. Gold's general average pip movement per day being circa 300 pips, so it provides a lot of day trading opportunities, and it does do a lot of retracement. So even if we come down and hit that level, we may get a retracement. Moving on to WTI. Wow, okay, so WTI has actually just broken past the 101 level. So the 101 level been a key level for WTI at the moment. It's just broken actually whilst we've been on this, just setting up for the webinar at the moment. So this is also a key level here, which you can see here over the course of the week that this level, we have had lower highs here, and we've not really been able to carve out any major sort of support here on we've not been able to get back above the uptrend here on WTI, to be specific. We've been below very key moving averages. We've maintained this trend channel here of lower highs at the moment. I've just got at the moment the November contract, so you can see all the data going back to August, but I've got all my technical levels based on historical charts here as well. So the 101 level that we've just broken past, that's going to be important. I will break that down now into the 4-hour time frame here, and watch to see whether we are going to get further weakness here, whether we're going to end up going from this 101 level back down to the next level of support. There's a level of support below at 137, and the next level below that, 99.29. Now this level has been defended, the 101 level, quite a lot. We've seen 1, 2, 3, 4 bounces off that over the past 2 weeks or so. So we could see certainly some more downside momentum now on oil, now that we're sitting right on that 101 level at the moment. Let's just take a look at Brent. Brent did have a breakout yesterday above the recent consolidation. Again, I'm just in the November contract, which might vary slightly. November contract is pretty much like for like in terms of the actual pricing that we've got on there. So 110.92 level that we're at the moment, this is a previous level of resistance. So this is actually quite important where Brent is right now. The previous breakout that we actually got yesterday is coming back to retest a key moving average actually on my historical charts, the 50-day moving average. We're actually just bouncing off at the moment. So if you do have historical charts, you can see that 50-day moving average we're bouncing off at the moment. If we were to close with Brent, given the current setup that we have here on the daily time frame, this actually represents a inside candle on the daily time frame, and we would potentially have some opportunities here to trade the break going into Monday next week. At the moment, really on Brent, my interest will be lying here with WTI to see if we're going to get further weakness here as we've broken through 101. So quite a lot of activity occurring just this afternoon. Moving across to the commodity currencies, New Zealand US dollar, it's failed again to really break out of this consolidation. That's really interesting. So New Zealand US dollar, we are in a consolidation zone here, which we've been in really for over the past about two and a half weeks now. We've just been in this big consolidation zone. You can go a little bit lower to also encapsulate there's a Fibonacci level and key moving average just below there as well. Really, in order to have any confirmed trade setups on this, we really want to see a break below a key Fibonacci level here at 0.8176, or a break above the resistance here, which takes us to 0.835. So continuing to channel here on New Zealand US dollar. If we close here below the key Fibonacci level, just above, later on today, this might start to show that we're going to get some sell opportunities moving into next week. We're starting to see some key moving averages cluster here, and if we get a close below those key moving averages, we could certainly see some downside momentum here on New Zealand US dollar. Australian US dollar has been working its way upwards. We're in a upward trending channel at the moment. We keep getting supported by the 0.93775 Fibonacci level. It has been a choppy ride. It's not been a smooth ride, but you can see just today actually we did hit one of our profit targets, which was the previous high of the week at 0.94852. We've continued to get rejection above this key Fibonacci level, and we've continued to stay above and close above key moving averages. So at the moment we'll see whether on Australian US dollar, whether this is just a retest of these moving averages before going higher again. If we can break above today's high and also Tuesday's high, we'll be looking at 0.95055 as the next key level of resistance. But you can see at the moment with gold coming lower, with silver coming lower. That's also the correlation there is with New Zealand US dollar, Australian US dollar. They have also been brought down a little bit by that. And in contrast to that, the USD Canadian dollar finding some support today. USD Canadian dollar has been quite a predictable trade in terms of, if for those of you who follow some of the weekly technicals, we've got a massive dragonfly doji at a key level, which was going back about 2.5 weeks ago now. Since then, we've had some retest of a Fibonacci 0.2719, providing some support on the weekly until we finally broke out and actually hit our profit target just yesterday, which was at the 1.0414 level, the green Fibonacci level here just above. We do have a cluster of levels here which are providing support and resistance on USD CAD at the moment. What I would expect now is really probably a level of consolidation. We are getting some support here at a key 50-day moving average on USD Canadian dollar. We're finding resistance, and USD CAD is classic for after it's had a big move to start consolidating, forming a box sort of a setup, and then enabling us to trade the breakout of that. So that could be really interesting. If we don't breach yesterday's high, yesterday's low, moving into next week, that provides us with a good opportunity for a breakout. So USD CAD, not too much action on that today, but definitely one to be looking at setups into the weekend, ready for next week. Also wanted to cover natural gas for you as well. We're just on the futures contract here for natural gas, so I've just transferred across my historical levels here. We did actually hit a key Fibonacci level yesterday, so same situation we saw with Brent breaking out, WTI breaking out. We've got a big surge in natural gas yesterday as well. In terms of the fundamentals on natural gas at the moment, well, the price of natural gas has steadily been climbing this month, just in time for the start of the winter heating season. The heating season runs from October to March, according to the US Energy Information Administration, and month to date, natural gas prices have climbed nearly 5% now. So last winter, daily price for natural gas started their ascent in October, only to peak by late November, and natural gas seasonality could pan out similar fashion this year. So we're definitely seeing some profit taking at these key Fibonacci levels just above, and key resistance from yesterday. Roughly, we spiked up to here about 3.792. You can see some profit taking here on the daily time frame, where we just got a bit of an inverse hammer forming here. But really, so in order to get more buying here, we really want to see the market break above 3.8 level next week, get a bit of a breakout above this level, and also above previous resistance level at 3.88. But above a break above this Fibonacci and a close above that Fibonacci, we could certainly be set for higher prices. Also, just wanted to give do some analysis also for you on the USD ZAR, just to have a look how that's moving at the moment. We are, to be honest, below some key moving averages here. We broke through a Fibonacci level just yesterday. Today we're finding a little bit of support at the moment on the USD ZAR on the daily, but you can see we've not breached above yesterday's high. We've got a lower low, so we do seem to be grinding lower just at the moment, and some key moving averages here are signifying that we could have a further move lower. The next key level really below here, you've got a couple of key levels of support, but the next Fibonacci 23.6 retracement here being at 9.76971. So we could see further downside moves here with the USD ZAR, particularly if the US dollar index gains some strength over next week. For me, the key markets to be monitoring today, you've got gold, definitely, silver, definitely, you've got a lot of action on there. WTI, I would really, now we've broken that 101, I think we're going to see further downside here with WTI crude oil. We'll be waiting for this to break for quite some time. That's definitely one to watch today. And also, I'll be keeping an eye on next week USD CAD, Australian US dollar, see if it gets supported here with a bit of retracement today, if we can break back above to the next key Fibonacci level above. New Zealand US dollar just continuing to stay range bound. Okay, so with that, guys, we're going to go have a look at the major news coming out over the today and moving into next week. So today we've got at, so pretty much occurring in the next 5 minutes, at 2:30 p.m. Actually, no, this will be in the next hour and 5 minutes. 2:30 p.m. CAT is Central Africa time, is going to be the CAD employment change. Employment change measures the change in the number of people employed, of course. A higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD. And that's important because the CAD is correlated to oil price. At 3:55 p.m. today, Central Africa time, we have the US Michigan consumer sentiment. Now, the University of Michigan Consumer Sentiment Index rates the relative level of current and future economic conditions. There are two versions of this data released 2 weeks apart, preliminary and revised. The preliminary data tends to have a greater impact. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar, and that's important because the US dollar is inversely correlated to gold. Moving into next week, next Wednesday, we have the US core CPIs. That will certainly affect gold and silver trades as well. That index measures the change in the price of goods and services from the perspective of the consumer. It's a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar, which would inversely affect gold and silver too. And of course, moving into next week, for those who trade natural gas, crude oil, next Wednesday we have the US crude oil inventories at 4:30 Central Africa time and 10:30 a.m. ET. This data reports the number of barrels of crude oils commercial firms have in inventory. So this week the forecast was 1.4 million and the actual was over 6 million, and that caused a big move down in the price of crude due to the big surplus of oil. So very nice short opportunity on Wednesday. So commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil. A lower than expected reading should be taken as bullish. Next Thursday we also have the US natural gas storage, which will affect your gas trades. So the natural gas trades, the Energy Information Administration, the EIA, provide natural gas storage report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. So while the US is a good indicator, this is a US indicator, it tends to have a greater impact on the USD Canadian dollar. The reason for this is due to Canada's sizable energy sector, and that's important because the CAD is of course also correlated to oil. And next Friday, it looks like at the moment we could be due for non-farm payrolls next Friday now. So due to the US shutdown, non-farm payroll data is now expected on the 18th of October. That measures the change in the number of people employed during the previous month, excluding the farming industry. So of course, job creation is the foremost indicator of consumer spending and economic activity. That's a very high impact news announcement for gold, silver, commodity currencies, oil as well. So do make sure you catch that if you are going to be around next Wednesday. We'll do actually a post non-farm payroll special next week on Friday. So a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Now this is only if they do have a resolution of the shutdown that we get non-farm payroll, so it's not confirmed just yet. Okay, so those are the key news announcements to be looking out for over today and moving into next week too. And of course, if you want to take your trading to the next level, would like to find out more information on our live trading room advanced programs and have access to our exclusive Gold and Silver Club members community, and also find out more about our Gold Silver Mastermind Masterclass workshops, you can find out more about those packages. Very simply request more information on the Gold and Silver Club live trading room. You can either go to www.jointhegoldandsilverclub.com, or you can contact us at our Johannesburg office at +27 11 083 8403, or email us at office@thegoldandsilverclub.com. And of course, do make sure you take advantage of our free weekly newsletter at thegoldandsilverclub.com. So you receive free weekly gold, silver, oil, commodity currency news, live market analysis, and prices. So do make sure you take advantage of that. Okay, fantastic. And yeah, a big thanks to ACM Gold for putting on this webinar for the Gold and Silver Club. Today, we love the ACM Gold, the trading platform. So guys, we wish you good luck for the rest of the trading day and next week too. Have a great weekend, and we'll of course see you on the next one. Okay, take care, and bye-bye.